Good morning, everyone. Thomas Montgomery with IIMFL and Smart Money Alliance. It is a beautiful Tuesday morning, February 9th, 2021. I know it's Tuesday morning because it's trash day. I forgot to set trash out by the curb at the office. Heard the trash truck run and I'm out of breath from running out to catch it. So with that being said, though, we are excited to get with you today. We get together with our distribution partners most Mondays through Fridays at 8 o'clock Central or a minute or so before. We have three primary types of distribution partners. We have affiliates. It's free and easy to be an affiliate. Who wouldn't want to be an affiliate? Get paid to help others, no cost. Credit literacy educators are involved with educating on credit and help people get enrolled in the Credit Boost program, which has guaranteed results, no upfront cost, and we average around 100-point increase in 30 to 60 days. So that's great for anyone looking to improve credit. It's not credit repair, it's adding positive credit. And then thirdly, we have the cream of the crop, our joint venture partners, and they are involved in a 50-50 revenue split of net income. So our focus now, as we covered yesterday, is we are actively decentralizing the mentorship. So what does that mean? So when clients enroll in the Access to Capital or Capital Ready Package 3.0, which we're going to talk about and describe today, then the clients go through a 4-week curriculum. It's very structured. It's a consolidated model of what I used to teach at the college. So it used to be that people would have to apply to college, get accepted to college, pay 3 credit hours and go through my class. Now it's freestanding, not part of the college or university, and they can knock it out in 4 weeks. So that's great, but they need someone to guide them through that process. And we call that the mentor role. And we started using some external mentors last year and had some successes and failures. And so then we pulled back. But we fixed all of that, and so now we are frequently assigning clients, we call them orphaned clients, out to those of you that will mentor these small businesses. So these small businesses are either in Access to Capital or Capital Ready Package 3.0, which I'll talk about in just a moment. And it's $100 an hour to do that, and then you get to write the key person policy. And as we talked about yesterday, it should be much more than that because now you're a trusted, known resource. So if you are insurance licensed, chances are you'll be able to help them with their retirement and other lines of coverage, which is between you and them. That's not our role. You write the policies wherever you want, however you want. All right, so with that being said, now with our daily calls, we need to focus mainly on support because we're growing too quickly for us to schedule 5,000 individual calls with all of our distribution partners. So instead, that's why we get together here. So you can bring your questions, comments, concerns, put them into the Q&A box, question and answer. We address them for you and everyone else. And so that's what I need you to do is if there's questions, comments, or concerns, you should be typing it into the Q&A box now so we can address it. There were 2 topics that came to us yesterday that we redirected to today's call, and that's what you see on the screen here. So first, let's look on the left-hand side. There was some confusion on what is the difference between Access to Capital and the Capital Ready Package 3.0. Both of them are essentially the same. There's just a couple exceptions. Number 1 is that in the Capital Ready Package 3.0, which sits here on the contrarian side, Access to Capital, it's the page I'm showing you here. In this case, the clients pay the refundable deposit up front, not later, up front. And so they pay you up front the $2,500. Why? Well, that's the way that it's modeled. They get some extra perks by paying that now rather than waiting till later, which I'll describe to you, of course. But it's immensely helpful to you. Because what you know is if a client goes through Access to Capital, we normally don't take them to FTF, first tranche financing, until week 2. So you're looking at a 2 to 3 week delay of getting your money. If you bring them directly into Access to Capital, you're getting your money first. They are paying your business You keep half and you forward half to us. So you're generating gross income of $1,250. I'm sorry, gross income of $2,500, net income of $1,250 because we split it 50-50. It's very strategic for you to be collecting that $2,500 because as you put that into your bank account, that shows good deposit history. It builds, of course, your bank balance. And so that is a good thing for you to be collecting the $2,500. You have a 50% profit margin, right? You're keeping half and sending us half, but that is beneficial to you both in boosting your bank history as well as shortening the time to get paid. Now you might say, well, wait. If access to capital and Capital Ready Package 3.0 is the same, why would someone want to pay $2,500 up front? That's a scam. Well, we're offering them a couple perks, aren't we? If they come into the Capital Ready Package 3.0, they get commercial office space, a commercial address, I should say, commercial address for free. Now, not everyone needs it, but that's worth $1,200. And so that's a perk. And then secondly, they are getting credit boost at no additional charge. So if they need credit boost, and they may or may not, then they would not have a performance fee. And that saves them, let's say, another $1,000. So they're paying the same amount of refundable deposit. They're paying it up front instead of later. But from that, they're getting two benefits, the commercial address for free and the credit boost for free. To you, the big benefit is you're getting paid right now, rather than any type of delay. So there's questions about Capital Ready 3.0. It's parked over here on a different site. What you would do is you'd bring them here. You'd help them fill out this application that's on the left-hand side. You collect the $2,500 from them. We're not going to collect the $2,500 from them on Capital Ready 3.0. You will collect the $2,500. You'll send us half. We'll implement. Okay, so that was one of the key questions that you all had. How does CRP 3.0, Capital Ready Package 3.0 work? Any questions on that? Okay. Second, we had a question regarding adding insurance agents, and I'll send this out when I send the recording. This is a slightly updated position description to recruit insurance agents. Why would you want to recruit insurance agents? Well, if you're a joint venture partner, you're going to be getting probably pretty busy, and you're probably going to want to have more help mentoring these orphan clients that we're sending you. And so with that, you can bring on insurance agents under your joint venture incubator, and you can have them do the mentoring under your oversight. And then they, however you want to split the dollars up, will get paid the $100 an hour for doing the mentoring, and you'll be writing the key person policies. So this is the sample position description that we've created. And I'll send it to you in Word. This is a PDF, of course, but I'll send it to you in Word so you can use this if you want. Now, let's say that you're not a joint venture incubator partner. Why would you want to use this? Because you can recruit insurance agents to be your affiliates, and that would generate overrides for you. So in either case, these are the two topics that I needed to bring to the table. And I know many of you have other questions that we're going to go through. So first of all, how does CRP, Capital Ready Package 3.0 work? How do we submit them? What's the difference? We've covered that. And then secondly, we're showing you an updated, slightly updated insurance agent position description that you can use. And you can post on Monster and Indeed and Craigslist and wherever you want. And if you don't get, I don't want to exaggerate, but I'll stick with this. If you post this diligently, if you don't get 100 insurance agent resumes or applicants in 30 days, I'd be very surprised. And that date's wrong. This should be 2021. Okay, so now we're going to get to your questions about anything, because this is the support call. We love you, we need you, but we don't have the time to have 5,000 individual calls every week or every day. So this is where we get together for support. All right, so Randall's asking a good question about tracking access to capital submissions. So we will provide you, Randall, a landing page to submit your access to capital submissions. I'm going to stop for a second. This is a big deal before I answer Randall's question. We are in the process of building a new front-end system that's going to be more seamless and easier to submit with better reporting. We're meeting with the programmer again Friday afternoon. So just so you know, we realize that we're growing so quickly that we need to have some greater efficiency in processes and reporting. We know that. We're working on it, but that wasn't what Randall was asking. Randall was asking, under the current scenario, access to capital. So you would drop your lead in on your landing page that we provide to you for free. That tracks them to you. Under the current model, we send them the DocuSign. You're copied on it, Randall, as the referral source. And once they execute it, then you get a copy of it, a carbon copy. So you know when clients have executed the agreement. So now they're in. Now they're a client. They're no longer a prospect. Furthermore, since you're going to be mentoring the clients that you submit, Randall, then we'll be submitting them over to you to mentor, and you'll guide them through over that 4-week process. You'll be paid $100 an hour for that. So those are the key triggers. And again, we're spending a lot of money on a new front-end interface that everyone will love, but I don't want to distract anyone with it now because it's still under development. Some people will say, well, when I look in Post Affiliate Pro, I don't see all my clients. Well, Post Affiliate Pro tracks commissions. So just because you submitted a client, if there's not been a commissionable event yet, then you don't see them in Post Affiliate Pro. Okay, thank you for that, Randall. Dion says his Facebook ads are rocking. He's got a quick question. And I think he's asking about collecting this money. So if Dion is enrolling clients in the Capital Ready 3.0 and he's helping them apply and then collecting the $2,500 from them, then you, Dion, and the rest of you, you can collect that. And you can do this as a joint venture partner or as an affiliate, by the way. But if you're collecting the $2,500, Dion and everyone else, it's up to you how you want to collect money from the client. Some of you take checks, cash, money orders, Venmo, PayPal, Zelle, MoneyGram. A couple of you are taking Bitcoin. It doesn't matter to me. That's your business side. And then, of course, you'll keep half and send half to us. But as far as how you want to collect the money from your client when they pay you the $2,500 under the CRP 3.0, that is up to you. And again, some people get confused, so let's just clarify. We're not changing anything. Access to capital is no upfront cost. That's not changed. We're talking about a variation of that, which is called Capital Ready 3.0 for those of you that are better closers and want the money to go into your bank account immediately. Thank you, Dion, for that. Barry's asking a great question regarding weekly reporting. So let me step back. I'll tell you all that there are two significant projects, internal projects that we have going on. Number one is what I just discussed, building a better front-end interface that will allow clients to agree to terms and conditions online instead of us having to go through the clunky DocuSign process. So that's in development, that's coming. I don't have a timeline for it. I don't want to set expectations we can't meet, but we realize we need a more efficient way so you can submit someone in, you know immediately that they've been submitted and that they agree to the terms and conditions and they begin their implementation immediately. So that is project one, that's underway. The second project has to do with Barry's question. We are in the process, and I hate to say too much, but I'll just paint a loose picture. We are in the process of setting up a new nonprofit entity that's going to be a lender. It's going to be an SBA micro lender as well as a true lender. By setting it up that way, we're going to be able to do weekly reporting, and everyone's excited about weekly reporting to the bureaus as a data furnisher. So when people have a positive trigger, a positive payment history, they're not waiting a month for a reporting cycle, it's weekly. But we've been working with all the advisors to build that out, and that's taking some time. I don't have an answer to the time frame, but what will happen, Barry, is you'll know, because a brand new nonprofit is being formed. It'll be a 501c3 that's specifically and only a lender, a true lender. And we're getting a contract with the SBA to be what's called a micro lender, which allows us to lend SBA money out to clients up to $50,000. Then we'll be able to become a full SBA lender, not a bank, but a full SBA lender to do larger amounts, again, with SBA dollars. But all of that's the second project, and that's still in the works. So I don't have a time frame that I feel comfortable giving either of you yet. But those are some big things coming, right? Number one, if you can start submitting clients and they, bam, instantly agree to terms and conditions, and bam, they're instantly launched. They're started right away in credit boost or access to capital. That's huge. So we eliminate delays. And then secondly, when we're a true lender, then that enhances our reporting abilities. And also now we can be a lender. Right now, we're not a lender. We're a technical advisor. But soon we will be a true lender. All right. Thank you, Barry. Scott's interested in a JV partnership. Yep. And so, Scott, if you haven't reviewed the JV partner DocuSign, then you want to email us and let us know that you need that, and we can get that to you to review. And then, yes, as a JV partner, you can write the key person policies through whichever IMO you want, through whichever carrier you want. You can use term or whole. You can you're able to meet the suitability of the clients. We're not going to get in your way of that, so that makes it easy. Thank you, Scott. Michael says hi. Hey, Michael, how are you doing? Okay. For the insurance agents, there's no background check fee. And when you're bringing insurance agents on, they could come on as a joint venture partner. And so if you bring on a joint venture partner as a separate joint venture incubator, then we pay you $5,000 for every one of those that you bring us. Or you may be just recruiting insurance agents to work under your JV incubator, and they're really your employees, they're your staff. And if that's the case, we don't even need to know about them. We just work with you. Your staff is indifferent to us because you're responsible for their performance. Hopefully that helped, Robert. All right, and Scott's asking about the lag time. So we're pretty close to being caught up on DocuSigns. Our goal is to process DocuSigns in 1 to 2 business days. We had some delays last week because of updates and processes and new staff being trained and so forth. But in general, it's 1 to 2 days. But I know that there's been some lag time that they're getting caught up with. The beautiful thing, Scott, as I mentioned, project number 1, which is to allow them to do all of that on the web at the time of enrollment, will eliminate all those delays. And again, we're meeting with the programmer again Friday afternoon to work on that. Okay, so Quentin's asking, so on the, well, I'm going to answer Quentin's question 2 different ways. So if Quentin, if you or anyone else is bringing someone in to the access to capital program, then they pay you the $2,500 up front. You keep half, you submit half to us. If you want to work with them on financing that, maybe you accept half up front and you give them some payment terms for the other half. That's between you and them. But essentially, we're going to implement capital ready clients, which is described here, once you've submitted half to us, the $1,250. The second interpretation of Quentin's question could be under the access to capital, which there's no upfront cost, then we don't collect the refundable deposit up front. Instead, we go to FTF, first tranche financing, week 2. And so even if you all are mentoring, you're not responsible for doing that. We handle the funding. It's not pushed out to you. You're just guiding them through the process. But you're right, Quentin, if an access to capital client gets to week 2 and we can't get them approved for third-party funding, we do have a guaranteed lending instrument for the $2,500. That is correct. So everyone should, and I hate to use the word everyone, but we'll just say 99.999% of people will get funded for their first tranche of financing now and in week 2, regardless of credit history. Robert's asking about writing the key person policies. So it's completely up to you, Robert, and everyone else, where you want to write the key person policies. When I was writing them and I got overwhelmed with them, once you start writing 20 to 30 policies a month, it's a lot. Now, the way that we've handled better volume is Mutual of Omaha has a policy that we're using that's guaranteed approval, about 2 to 3 days underwriting, guaranteed approval age 70 and below, I should say. And there's no medical on it. It's fast. So we're big fans of that Mutual of Omaha product, but no one is required to use that. We have Primerica agents, we have New York Life agents, we have State Farm agents. It doesn't matter to us. You can write whatever you think is best for you and the client. All right, so question about landing page. Just email in info@IIMFL if you need a landing page, and we'll get that for you. Thank you for that. So affiliate question, great. So on affiliates, for access to capital, the affiliate comp structure is 1% 3 levels deep. So we pay out 3% on the affiliate channel, and that's off the performance fee. And the affiliate gets paid the affiliate that brought the client gets paid $1,000 off of the first tranche of funding, which is used to pay the refundable deposit. Thank you, Randall, for that question. All right, Michael's getting his deposit today or tomorrow for his first tranche financing as a client, which is great. And so absolutely we'll help you with that and get the refundable deposit in. So yeah, once your funding hits your account, so you have the liquidity, and let us know, and we'll help you submit the refundable deposit in and then work on next steps. Congratulations on that first round of funding, Michael. Okay, so Dion says with his Facebooks, so he's focusing on the access to capital, which makes the most sense, right? Access to capital has what? $100,000 guarantee, no minimum credit score, no minimum time in business, and no upfront cost. You're going to cast a massively wide net with access to capital. That makes sense to do. All right, and so what he's asking them to do is to pay the $2,500 up front, and he's giving them a discount of $250 by doing so. Yeah, that makes sense. So actually, he's not promoting access to capital. He's promoting Capital Ready Package 3.0, which is the same process, except they're paying up front. And with that $2,500, he's given them a 10% discount to take action now, which is smart. So he's collecting $2,250. He's submitting $1,250 into us, and he's making a quick net of $1,000 a pop. Plus, he'll be writing a boatload of key person policies. So that's good business there, Dion. Good strategy. Bernard asking a question. So no, the return on premium is not a requirement. That's what we offer. We internally had been offering is guaranteed issue return of premium. And so people love that, right? It's quick, it's easy, and if they don't die, they get their money back. But no, you don't have to do that. You do not have to offer a return of premium policy. It's whatever you think is best for the client. Thank you, Bernard, for that, and I'm sorry for the confusion. John asked, what's a typical first tranche funding in week 2? I hate to give you typical because what you'll say is, oh, well, Tom said this. I mean, we see $2,500 on the low end. We've seen up to about 110,000 on the high end, but as the credit markets have gotten tighter, I think what I would say is between 2,500 and 75,000 is going to be the normal range for the first tranche. But it's going to vary based on their credibility, right, John? You got someone like you with great cash flow and great credit, obviously you're going to get approved for more than someone that's not as strong as you, John. Good question. And again, only joint venture partners do the mentoring. Affiliates don't do the mentoring, but almost all, I shouldn't say that, that's an exaggeration. Many of our affiliates are moving into the joint venture role because they increase their front end income from $1,000 to $1,250 per client. They increase their performance fee share from 1% to 5%. And then they get the benefit of being the mentor as well. So Randall, you don't have to become a joint venture partner, but if you became a joint venture partner, you'd make a whole lot more money and then you would do the mentoring. But if you're not a joint venture partner, then we assign those clients to someone that's accepting orphan clients. And we got a whole bunch of you that we handed out leads to, 1 to 5 leads yesterday of, well, I shouldn't even say leads. I hate to use that word because these are not leads. These are contracted clients that are ready to go, that are ready to be mentored. You get paid $100 an hour for every orphan client we send to you. Plus you write the key person policy. And again, someone's going to get the hair in their back saying, well, I'm an affiliate, I'm an agent, I'm going to write their policy. Well, then you write the policy, then you're right. Then the mentor wouldn't need to write the key person policy if you've already written it. I understand that. But the mentor that works with them will still be paid the $100 an hour, can still do a needs analysis, can still determine are there other asset protection needs that that person has above and beyond the key person policy. But you're absolutely right, Randall. If you're the affiliate and you write the key person policy, no one's going to take that away from you. That's fine. But you'd be in an even stronger position if you were also mentoring them or had someone on your team mentoring them, because once you do a needs analysis of the average American citizen, most of them are not saving for retirement. Most of them do not have proper asset protection above and beyond the key person policy. Okay, so again, we get together 8 o'clock Central, Mondays through Friday, most Mondays through Fridays. And so this is the time that we need to answer your questions. So Scott's asking in all caps, Scott's yelling at me, and I'm going to yell at you because Scott's yelling at me. The question, can affiliates mentor their own clients? And the answer to Scott's question is joint venture partners do the mentoring. Only joint venture partners or their delegates. So no, affiliates are not trained, supported, nor paid to mentor their own clients. That's what joint venture partners do. So as an affiliate, Scott, you can refer in people and not worry about mentoring them. And someone else will take care of that for you with no work or effort on your behalf. It doesn't reduce your compensation. But Scott, if you wanted to mentor your clients, then you could be a joint venture partner, get paid more, and mentor. Okay, so we're clear that affiliates don't mentor. That's not their role. Affiliates just simply refer in and get paid. That's all that they do. Okay, who else has questions? And you can yell at me in all caps, or you can type normal, whatever you want. But what are the questions? Okay, yes, we have a daily webinar for clients. So let's go to iimfl.org, go to the small business certification page. No, Scott, I was just joking with it. Yeah, no, I wasn't worried about you typing all caps. But as we just showed everyone yesterday, and it's still here today, we have daily webinars. And so this is where prospective clients attend for questions. And so we're there most Mondays through Fridays at 10 o'clock Central to answer your prospects' questions. And you can sit on it too. Now, at 10 o'clock, I'm telling you, if no one's on that webinar bridge, that Zoom bridge, and you can see there's a click here to register. If no one's on it, we've got other things to do. We hang up. I'll have people that come to me at 10:05. Well, I was on your Zoom. What happened? Well, if you weren't on at 10 o'clock, if no one, I should say, if no one was on at 10 a.m. Central on the dot, then we end it. We've got better things to do. We're not going to sit around wondering, well, I wonder if anyone will join us. And some of these Zooms will have lots of people and some we have none. So as long as there's one or more person on that Zoom at 10 o'clock on the dot Central, then we conduct it most days. All right, so there's the answer to that, Bernard. And Robert, you stated, you made a statement, not a question. So I don't know how to respond to you. It's just a statement. There's not a question involved. However, Timothy has a question. So how much funding have the capital access programs attained? So on the access to capital, people will get as much as they qualify for as quickly as they qualify for it. We make a guarantee that everyone gets at least 100,000 that goes through the access to capital program, Timothy, that complies. Will they get it all at once? Some do. Some will get it in tranches based upon their qualifications and their circumstances. Can they get more than 100,000? Of course, if they qualify more than that. You know, what we do, we're technical advisors. We're helping them with the packaging and the preparation. But just because they become our client doesn't mean that all of a sudden, oh, well, you instantly qualify for $1 million just because you're our client. That's too good to be true. Now, again, when we get Project 2 implemented, we will be an SBA lender. We're in the process of that now. And so at that point, it'll be a little bit different, but let's not get distracted with that because that is not in place right now. But when it is, we'll let you know. And then it'll be different. They'll actually be able to apply for SBA guaranteed loans through us. All right. As a JV, next question, as a JV partner, am I responsible to assist the client in setting up the business profile? No, you're not. Randall asked the total fees to become a JV partner. Yeah, great question. So the JV partnership used to be called the branch manager. It's one and the same. There's no difference between the two. And so with that, it was set up to be a 10-year business license. Is it a franchise? No, it's not a franchise. It's a business license. And so over that 10-year period, it was set up originally to be a $100,000 license fee. So just under $1,000 a month. However, the pandemic hit and we cut that from 100,000 down to 50,000. And we added a $25,000 working capital allocation. So you could argue the net cost for a 10-year joint venture branch office is really $25,000. There are two ways that funding can occur. We can fund it internally for you, guaranteed approval, so no minimum credit score, 0% interest, low $250 payments. Can't beat it, right? I mean, where else are you gonna go start a significant business opportunity for next to nothing, guaranteed approval, 0% interest? Or scenario two is, Rando, we use third-party financing to fund the note, and then you would be taking out a $50,000 loan through the SBA or whatever other lender. And then if you do that track, then you actually get $25,000 of working capital back once your license fee is funded, the full license fee. So I think that is the answer to your question. All right, and then Mr. A's asked, once you become an SBA lender, will clients that already be in the process have access? Oh, sure, certainly, but we don't have a specific timeline on that. It's a lengthy process that we've been working on for a while. But we see that while there are other SBA lenders in the marketplace, that they're just not making capital accessible. And so that's not to speak negatively of them. They're smarter than we are and better than we are, I'm sure. But the bottom line is most of these small businesses don't have access to capital, and actually being able to loan out SBA money is powerful. So that's where we're going. Not ending our approach now, but adding that. All right, and then we'll take this question and then end it. So Quentin asks, what's the main difference between the credit literacy educator and joint venture partner. Well, the joint venture partner works with clients. They mentor clients. They get assigned orphan clients. They write 20 to 30 or more key person policies a month. Credit literacy educators don't do any of that. Credit literacy educators create awareness of credit literacy and Credit Boost, and they direct people into their landing page to enroll in Credit Boost. So joint venture partners are really involved with the clients, whereby credit literacy educators may educate, but they're not involved with client implementation. And of course, JV partners make a lot more money. Yes, nonprofits as well as for-profits can participate. And then any of you that want working capital, just enroll in the Access to Capital program, just like any other client does, and we'll take you through that process just like clients go through it. Because it's not, even if you're a joint venture partner, it's not like there's some different process. It's the same process. All right, well, hopefully this was helpful. So we will be back tomorrow morning, Wednesday morning, and Thursday and Friday, and most weekday mornings. This is where you need to bring your questions, comments, or concerns to, because you're very important, but we just cannot physically absorb answering 5,000 or more people's questions every day individually. It's impossible. We would have to charge, we'd have to have some other mechanism of charging money just to hire a staff of people to answer your questions. So that's why we get together about 240 times a year, about 20 times a month, Mondays, most Mondays through Fridays at 8 o'clock Central, to answer your questions. All right, thanks everyone. We'll see you tomorrow. Have a good day. Bye.